What's up, guys? So, let's go through the disclosures and disclaimers. As always, this is for entertainment purposes only. Nothing should be taken as legal advice or investment advice. Make sure that you do your own research. Make sure that you have a plan if you are investing. And make sure whatever you're doing is what you think is the best thing to do. Investing is inherently risky. You can win a lot of money. You can also lose a lot of money. So, make sure that you understand the risks before you invest or do anything like that. Disclosures. We have, we have a lot of shares now. I think we have 425 shares or so. So we got a lot of shares at Gamestop. We also have about 20 call options, give or take a few. So if you followed us for the last couple of videos, we did sell a couple of the call options today, about 5 of them or so. And we did that to actually, hedge our bet, get some money back. And we used that money to, buy a little bit of other things. We bought some Ford stock because originally my thesis was that Ford was going to, skyrocket with or next after GameStop. And as the day progressed, that just became clear that's going to be a wrong thesis and that's not going to happen. But the money was stuck there. And then, I just decided to leave it because whatever, YOLO. Ford, go. I still think Ford's a great company, but I don't think that thesis is correct anymore. And then, so at that point, that's where I took the rest of that money from selling the 5-ish call options, and I turned that into more shares of GameStop, because my new thesis, and we're going to talk about what I think, again, this is all my opinions, these are all my thoughts, is that GameStop is going to freaking moon really, really hard, really, really quick. Could it be tomorrow? It very well could be. I do stand by my original thesis that I had, that it was going to happen in about 2 weeks. So it could be this week, it could be next week, but I think that in the next 2 weeks, so by the 5th, we're going to see GameStop at over 1,000. That's my price target. Let's take a look at why we think this is going to happen. And look here at the chart. First is what happened today. So we opened up at about 137 as the market opened. That's pretty respectable when you consider that just 2 days ago we were only at 49 bucks. And so you can see it does suck because we went up to 180 in the after hours. And so people were super, super hard. We almost 4 times the stock value yesterday in after hours and then coming back. So coming back down today and opening at 130 was a little bit disappointing for some people, but we'll take a look at why this looks like it's actually a good thing. And I had a feeling that was a good thing. We got a lot of data that came out today. But let's target the day chart. So 130 went up to 150, nice little spike, then dropped down. One thing to note is that any time that the shorts actually cover, that means they have to buy back the shares. They push the stock price up. So anytime you see this downward trend right here, this means that they're not covering. They potentially are shorting the stock more. Okay? So anytime that someone you see as downward trend, most likely that means there's more shorts coming. The other reason that a stock goes down is because people are selling. So this could be a thing that a bunch of people actually sold off right here, sold some positions, but it also very well could be that the stock got shorted. When the stocks rise, that either means 2 things. That either means someone is buying the stock to push the price up, or that means the shorts are covering, which essentially means that the shorts are buying back their positions. So when you cover, the shorts buy the stock back at the market price, and it brings the stock price back up. We got short data yesterday, so let's take a look at the short data. I don't think I have that tab up yet. Gme Short Data, it was about 60% of the float. So let's see if we can find this. It wasn't the greatest. It's going down. It went down like 20 points. Is it this one? So this one says, we don't know if this one's updated exactly. Short volume, 33 million. Market volume, 150 million roughly. Short volume is 22%. So they're saying approximately 22% of the volume, 22% of the shares today were short volume. Means that they borrowed 33 million shares today. We don't know how much actually got closed of that, but that's a lot of shares that got shorted today, if this is correct. So again, you have to take all this data with just huge grains of salts because, it can be manipulated. This is also very, very interesting too. They show you every 30 minutes the display change of how many shares are there available to short. And for most of the day, it actually was 0. There was literally no shares to be shorted. This is an incredibly bullish signal. When this is 0 or 15,000, this means the shares are incredibly hard to get. And what you want to make sure that you do is that if you have shares, you want to make sure that you put them up for sale so that your company cannot list them out to other people. Because your company wants to lend your shares out while you have them to other people. But if you have them up for sale and you want to put them up for a big price. So what I did is once I had some shares, I went ahead and put them up for $1,000 at the limit price. So to do that, you simply go to your shares, you click on the shares, you click limit sale, and then you tell them that you want to sell the shares for $1,000 or whatever your price point is. At that point, the shares can no longer be lended out by your broker, from what I understand. So there's also ways to tell your broker not to lend out your shares as well. So make sure that you look at your settings to find out if your shares are being lent out. If your shares are being lent out, they can be used against you and they can definitely be used to push the price down, which you don't want to have happen. So make sure that you do go into this. Down here, this is another good update for us. The short borrow fee is 12.78%. So this is why I originally thought that this was a great day, even though we didn't like moon and we didn't rock it up. But when this stayed over about 100, this means that the shorts are starting to lose money rapidly because it's costing them more and more interest every single day to hold their positions. So as a buyer, as a normal person like me and you, someone that's on Robinhood, we don't even have the access really to short the stock for the most part, and we don't have to deal with this. It costs us nothing. We buy the stock and we just sit there and we let it go up or let it go down, but it doesn't cost us anything. Whereas if you are shorting the stock, meaning you're borrowing the stock from someone else, you have to actually pay a fee to borrow the stock. And that fee is generally really low. We touched upon this in the other video. It didn't look correct. It was approximately a 1% borrow fee as of, I think it was yesterday or 2 days ago, which seemed incredibly inaccurate because at one point last time during the GameStop saga in January, February, the fee was about 60 to 80%. Like, that was an insane amount. And I don't know if this is a daily fee, if this is an annual fee, exactly. I don't understand all this. So if you know more about the fee, the borrowing fee rate, if it is daily, if it is yearly, if it is weekly, whatever the heck it is, please post that down in the comment section. Again, yep. So this is a bullish sign though. If it went from 1 to 12, that's a huge, huge sign. It doesn't matter if it's weekly, monthly, yearly, whatever. Just the increase of a 12 times in fee is significant. So again, this was also a very significant bullish indicator. So the next thing I want to talk about is the percent of float that is short. This was new data that we got from FINRA. And this is saying that there is, as of February 19th, it's updated. And this is what they give us like 5 days later. So as of February 19th, the short interest, it was 60% of the float. Which the float is how many shares are kind of available. And we'll take a look at the float over here. So there's a total of 69.75 shares. So you take 60% of that, and that's going to give you the roughly amount of shares that are shorted at that point. That's a pretty significant amount of shares, even though it is slightly down from last week's report. This is still a really, really big bullish signal, in my opinion. So this was a good sign. And then there's also the data that shows that they're shorting the stock, but they're not necessarily shorting the stock directly. They're shorting all the ETFs, which an ETF, for those that don't understand what an ETF is and what this means, is that it's a group of stocks all put together, like GameStop plus AMC plus 50 other stocks. And they're all grouped together in one big party. that party is like, hey, we're going to go work as a team. We're making an ETF. This is going to be less volatile. So yeah, you should put your money in the ETF, for example, because, we have a lot of different shares. We did all the hard work. We researched, and put these companies together and corresponding to like markets and things like that. So essentially it's just a group of shares, group of stocks put together, and they're generally less volatile. Less increases, less decreases. But what has happened is the big hedge funds are actually shorting those guys to indirectly short GameStop because there's no more shares to be shorted on GameStop. Remember, there were 0 shares to short, and now it's up to 15,000 shares to short. And the short interest rate is going higher and higher on GameStop. So these are all incredibly bullish signals. Even though, yes, it is going down some, this is still a significant amount of short interest directly on GameStop. Means approximately around 30 million. And again, you have to take all these numbers with grains of salt and use your own judgment. But let's look into what Wall Street Bets is saying and what is going on here. So this one here. I love this post. Short stock does not have an expiration. We touched on this just a little bit ago. Hedge fund shills are spreading disinformation saying 800 is make or break for GME. Call options expiring in the money on Friday will drive the price up if levels are maintained, but may not trigger the short squeeze. It may be Friday, but it could be next week that we see the real squeeze. Do not panic if the squeeze does not happen. It's not guaranteed to. The only thing that is guaranteed mathematically is that the shorts will have to cover at some point in the future. They are trying to get enough people hooked on the false expectation of Friday so that when it doesn't happen, enough people will sell out of panic/despair. Imagine if you had sold earlier this week at 40. We can stay retarded longer than you can stay solvent. This is what I touched about, is the shorts are going to try everything imaginable to push the price down. They're going to try and manipulate the news market, the information out in the media. They're going to potentially try to limit trading and halt trading again on brokerages like Robinhood and things like that. They're going to do everything imaginable to stop this from happening. So they don't want this to happen, but anytime that they actually have to cover, they have to buy the stock. So they're going to have to cover at some point. They cannot do this forever. Whereas us, we can simply keep and hold our shares forever and squeeze them out. It could take a long time. So it may not happen tomorrow. It may not happen the next day. It may not happen, next week. It may happen in 3 weeks, for example. But we are in complete control. The next thing that I want to show you guys about is what Mark Cuban said. Actually, it was about 20 days ago. All right, so this is like the first thing on Wall Street Bets. Just a little advice from a billionaire. If you still believe in the reason you bought the stock and that hasn't changed, why sell? This was taken from his AMA that happened 23 days ago on Wall Street Bets. Mark Cuban has pretty much predicted every single thing that has happened correctly since that AMA. Okay, let's go in there. Their goal, according to Mark Cuban, is to never cover their shorts because, let's give some context to this. If they try to cover, they're just going to squeeze the price up and up and up, and they're royally screwed. They literally can't cover. Like, they're trying to get their way out of this, but it's almost impossible for them, is what Mark Cuban is saying. But that would take the company going out of business or being delisted. That won't happen here. Strong words right there. Is that the only way the shorts win is that the company goes out of business or if they're delisted from the stock exchange. And these are not happening. These two reasons are not going to happen. So they're going to have to cover eventually. And they're too arrogant to realize that they're going to have to cover, and they're going to put up a fight. They're not going to go down to their grave willingly. They're going to put up the mother of all fights. They're going to just go whining, crying, kicking, screaming, and they're going to keep fighting. And, kind of why would you? They've been winning the game for 50 years. Why would they give up now to some retards on Reddit, some idiots on the internet that have no idea what they're doing, some new people that have just bought in 5 shares, 10 shares at a time, whatever, have no idea what they're doing? Why would they give up now? They think that we're going to fold. They think that we're going to get scared and run away. That's their plan, right? Okay. So next up, what he says, best thing that you can do. Again, this is Mark Cuban's words right here. Best thing you can do is hold on to the stock and do business with GameStop. This is a very, very important phrase that he's saying here, is that you hold is great, but you also do business with GameStop. And the reason he's talking about doing business with GameStop is that overall, you want the company to succeed as a shareholder. If the company succeeds, that pushes the stock price up. Whenever the company gives out good news, that pushes the stock price up. So we got good news yesterday or 2 days ago about the CFO, quote unquote, getting fired. They put out the PR that the CFO has resigned and he's getting a severance package, but a few hours later that actually got debunked, and there were more reports that said he, quote unquote, was getting forcefully kicked out of the team to make Ryan Cohen's vision more possible and actually happen, and that the resignation was just a cover because no one wants to be known as the guy who got fired from GameStop. Like, you know, it's a PR stunt for him and everything. So yes, he may have, quote unquote, resigned. That just was the smart thing to do. If you are going to get thrown out of the company forcefully in a matter of days or weeks, might as well resign and get yourself a nice severance package. You know, it's a negotiation thing. Anyway, the next step, Cuban says, if everyone goes to their website and buys from them, that is going to help the company, which will help the stock, which will help everyone here. We touched upon that in the last analysis of this quote. It's simply a self-fulfilling prophecy. Buying a stock is great. Buying stock will help a little bit, but buying things from the company, buying video games, buying consoles, the donations, and we've seen this too. We've seen a lot of donation thread pop up over the last month. People that bought stuff from GameStop, donated it to, you know, Children's Hospital, Rady's Hospital, etc., places like that. A lot of things, donations to the employees and such. That is big, big, big. And there's also, in the last month, there's been quite a few PlayStation 5 and Xbox drops on GameStop.com, and they do sell them in bundles. We talked about this in another video, that GameStop is correctly selling bundles to generate more profits off of the new consoles. Yes, they may not be getting a lot more consoles than other places like Walmart or Best Buy or Amazon or Target, but they are making more money than any of those other retailers because they are selling them in bundles, which have a bunch of other crap that you don't necessarily need. They're also selling in that bundle a gift card to GameStop, which, you know, is great for them. It's just pure profits almost. So GameStop has the right business model for this cycle. They are selling bundles with stuff that people don't want, and then you get a game, and then you sell the game back to them, and then they sell it again. Like, GameStop is in a great, great position with this console cycle launch. Last up, if you still believe in the reason you bought the stock and that hasn't changed, why sell? Once again, just reiterating the point that you need to hold the stock and believe that the stock is going up if that was your original thesis. If you thought GameStop was great at 50, if you thought it's great at 100, and you thought it was going to 1,000, you need to hold and be ready for that spike. Because when it happens, as you saw yesterday, it can happen in a matter of minutes. Going from 50 to, 150, it was pretty quick, man. It was insane how fast that spike happened. So we do need a catalyst for this stuff to happen generally. That is something that is going to be very, very important. And if nothing does happen slowly over surely, the stock might decrease a little bit. It might go down a few dollars here and there. It might go down $10. It might go down $20 if we don't get any catalyst. Last time we had the Elon Musk tweet GameStonks as the major catalyst to push the stock up to that $350 price point. We haven't had any major catalyst today that has come out. We are just building the internal support, it looks like, on Reddit. Reddit is drawing up the firing power from people and getting people hyped up again because, math and logic and reason. So this is another post that goes into math and logical reasons. Gme Previous Behavior is identical to what is going on now. Just a friendly reminder, Gme did dip because of the same flooding of short borrowed stocks. So they go and show you the data from the 25th, 26th, 27th, the open, the close, and they're like, okay, open, close. So it opened 96, high 159, close 76. So it opened high, closed lower. Next day, it opened 88, closed 147. So a pretty massive increase on that day. And then the very next day is when you had this dramatic spike up, 354 at open, and then down to 350. So we are in a crazy, crazy time if history repeats itself. Again, this was an Elon Musk tweet in between here. So do we have that kind of publicity? Do we have that kind of advertisement coming in? Maybe. Or do we even need it? That is another question. So he goes on to say they sold over 0.5 million short stocks shares today and borrowed a ton. I believe that's what he's saying. I don't understand exactly there. Calm your asses down and hold and buy. Hey, free money. Edit. Don't forget, tons of Euro boys are getting paid tomorrow, which that's another very big thing. Friday is payday for a lot of people. So retail investors potentially could just throw their entire paycheck into GameStop. That could be a thing and definitely is something to think about. Okay. If you can find all the shit yourself on NASDAQ, it's public fucking information. Wouldn't have thought this edit was needed. Do not message me, chill, and threaten me in DMs. That's a new low. Woo! So, some people are angry that he's telling the word that the stock is going to skyrocket. But the reason I really wanted to show this was down here in the comment section. I believe it has right here. Okay, quick. Someone make a "you are here" using the latest Gme spike instead of the Volkswagen squeeze. So before we were looking at the Volkswagen squeeze, and there's another video if you want to compare the Volkswagen squeeze to the GameStop squeeze. We did that, and it does reiterate the thesis of that it will spike up really hard, and then it will spike down, and then it will have a bigger spike. So this is very, very telling. This is all data from GameStop, okay? And it shows you, this is the original squeeze last month. This is where we are. Look at the chart, how familiar this looks, right? That's what he's saying. So this little section is almost identical to this. And this is where we are right now. Look at this. 2 red dead candles there. We have a little bit of downwards, a little bit of holding. So another day of kind of a down / holding. And then the next couple of days just like this could be the insane thing. History could literally be repeating itself, and the charts kind of signal that it's gonna happen like that. It is crazy when you look at this. So this is something that I think is just fascinating because, again, it also reiterates the Volkswagen squeeze. They did very, very similar. And you were like, why is this way up here? Why is it higher? Well, the Volkswagen squeeze showed that the second squeeze was actually a lot more powerful than the first squeeze. So this is a very, very interesting chart here. I love looking at this. This was just mind-blowing for me. And let's take a look at another variation of this. So this one is even more telling to me. You look at this chart. This is GameStop for the last, month or so. We had this and then parabolic increase. We are seeing a bigger start to this parabolic increase. This is leading to the fact that next up should see this parabolic spike. And if we do, since the uptrend has been higher, you would imagine that the spike is going to be even higher and more deadly than the last one. So, oh my God, these charts just made me so excited. Oh man, so excited, these charts. And then the last one here that he did post. This is the Volkswagen squeeze right here. So you can see, putting in the GameStop context, so the green line is him crayon drawing the GameStop data chart. And if you look at it, you can see it's pretty calm. The first squeeze on the Volkswagen right there dipped down some. Then they had that second letter bounce back up. We had that same kind of thing. And then it dipped down significantly. And then it rocketed way up. So, I mean, I am just going to be mind blown if this exact thing happens for GameStop. Like, and it looks very, very true. So we'll look back at this chart. So again, that first rocket up, that drop down, the second rocket back up, the drop significantly down, the wait, the build up, the launch pad happening, boom, up to the infinity squeeze that was talked about a month ago. And this is why that people really think and believe that the price point of, you know, 130,000, I think it is, or $13,000 per share is a reasonable price point. It's because they put it in a computer AI system, and the AI simulated what will happen if this goes as it is. And they're saying that the share price could get as high as that, like, I think it's $130,000 per one share, because it's an infinity squeeze. The shorts are forced to cover, they're forced to buy back. The system is so screwed up at this point, there is literally no way for them to come out of it. This was done through a computer AI program. You can check that out. Make sure that you do your own research. I'm not saying that GameStop will hit 130,000 it could be 13,000 is the computer AI system, but it's something to note that if this computer system AI is correct, and if these charts are correct, that means that buying the stock at $100 or buying the stock at $300 is a great value. For example, if it goes to 130 and you bought it at 300, you made a ton of money. But we do have to factor in there is going to be a lot of pushback. If the stock does go to, say, this $800, $900, $1,000 price point, you're going to see the brokerages once again cancel buying opportunities. They're going to stop you from buying the stock. They're going to do exactly what Robinhood did last time. So you need to be prepared to that. So that's what I don't think the computer generation is taking into consideration, is I don't think they are taking in the fact that the brokerages are going to prevent people from buying. The buys are not going to happen. So there are some tricks to get around that. What they found last time, it involved call options. If you were unable to buy stocks, they limited it down to like 1 or 5 call options or 1 stock, for example. You can actually buy a call option and then exercise the call option to get more shares. We'll talk about that when and if that happens tomorrow or the next day. I honestly don't think the massive squeeze will happen tomorrow, but it could. It very well could. So tomorrow it looks to me to be another downish day, maybe stay around $100, maybe go down to $90. That's what I'm thinking roughly on the charts. And then the explosion is sometime next week. But let's look at the options data, because this is also what is pushing the price up and pushing the price down for the most part, in my opinion, right now. The options is a very, very powerful tool. It gives you the option to buy 100 shares at a certain price, which means you essentially can buy 100 shares at a very, very cheap price. So open interest is how much of these contracts are out in the wild that can be exercised. We have February 26th, so this is the date that they're all going to disappear, and they all need to either be exercised, used, or sold off and closed out. So let's take a look at this. And really, you're supposed to be adding up all these numbers. I'm just going to scroll down and show you that there's a lot of numbers and give you the rough number that have already added up all of these contracts. So down to about $108, there's about where's my paper at? There's about 75,000 contracts from my quick number crunching of this. So about 75,000, give or take a few thousand, because, yeah, numbers. And again, the data could be slightly inaccurate, slightly out of date. That is also something to keep in consideration. But yeah, there's about 75,000. And what they do is they will slowly push the price up or price down, depending on if the price goes up or down. If the price goes up a little bit more, if we get up to this $150 price point, you would pick up another 1,703 contracts, and we pick up a whole bunch of 200s and 400s along the way. So we pick up probably about another 3,000 or so contracts right there. So you can see it's not too crazy, even if we don't get to 150. That is not terrible. What we really want to do is we want to make sure that we stay over $100, because this is 4,722 contracts. You also have to worry about the puts. So we talked about this in other videos. You have to look at the puts. This is also putting downward pressure. This is a way that you can sort of short the stock. So as the price goes down, more puts become more valuable. And if you look at this, there's very, very small amounts of puts. There's only hundreds of puts. This is a great bullish sign, in my opinion. This means there's not much downward pressure that is being put on the stock. So this is huge. And there's nothing like a significant amount of puts. At $100, there is 750 puts, but that's nothing compared to the approximate 75,000 calls that we have up there. So that's why Friday, tomorrow, is very, very important. Make sure that you hold, and you also want to look into your brokerage and see, if you can get shares. If you can exercise your contracts, you want to exercise your contracts so that you can take more shares off of the market. What's going to happen is that most of these contracts are going to expire, and they're not going to have the money to buy the shares corresponding to the contract. So when that happens, they're going to be sold back to the market makers, and the market makers not going to go and buy the shares. They're just going to go and close out the deal. So if it's worth $50, they're just going to give you $50 times the 100 and be like, okay, you're done. We're not giving you the shares because the shares literally don't exist, and it would actually cost us more to go buy the shares. So the market makers are going to gobble up as many contracts as they potentially can tomorrow to keep this price from exploding. Because if all 75,000 of these contracts were exercised, and that would mean 7.5 million shares would need to be bought tomorrow to cover all of these contracts. That's a lot of shares. That's literally a ton of shares. Oh my God. The float is what, like 50 million or so? So that is almost 15% of the float, give or take. Like, if math is serving me correct here, that's a lot of shares. And those get like bought in rapid succession, rapid fashion, pretty much. The market makers already are hedging. So they're slowly buying and selling a little bit of shares one at a time based on the current price. This is called delta. So delta and gamma, and this is what makes that gamma squeeze. Again, do your own research, check out gamma squeeze, check out delta, see what this is going on. Make sure that you understand the gamma squeeze, make sure that you understand the short squeeze, make sure that you understand together the gamma and the short squeeze pretty much can make the infinity squeeze. So this is why that they were saying if that we can get this price point to $800, all these other call options would then become in the money, and the market makers and the entire market would be fucked. Because at $800, there's another 10,000 contracts. And as the price keeps going up, the value of the contracts get more and more expensive. So at $800 price point, let's just tell you this roughly, each contract is essentially worth around $80,000, give or take, of course. But this is a rough estimate. So at $800 price point, every single contract is worth $80,000. And if there's 75,000 contracts and they're all worth $80,000, we get, it looks like $6 billion in money. So think about that. That's $6 billion that is going to be trading hands, and they wouldn't be able to really cover this. A lot of people would be bankrupt at that point. And there's also a lot other contracts too. So this is just the contracts for the week. Again, those numbers could be wrong on my part. The math could be wrong. So make sure you do your own research, check that stuff out. Again, nothing here is financial or legal advice. This is all entertainment purposes. So take everything I say with a huge grain of salt. So if we look at the next part here, we can go to March 5th. March 5th has a ton of open contracts as well. And the data is actually not updated right now. So it's showing 0. But we did the math earlier. So the data is not updated. There is approximately 50,000 contracts around the $100 price point. So even if we don't get the gamma squeeze this week and it doesn't skyrocket, next week is also a very, very significant milestone for us. And again, it costs us nothing to hold the stock. We literally lose nothing by holding the stock. And the shorts are losing money every single day. So it's getting more and more painful every single day for them. So of course they're going to want to scare you guys and make you sell your shares. But if you diamond hands now, this is the time to diamond hands now, because you have the potential for the infinity squeeze. Once the brokerages start limiting the stock purchase. So if they do the whole Robinhood, you can't buy the stock, we're going to close out positions. We're going to start screwing people over. They do that again. That is the signal that you do want to sell some of your stock. You do want to get out a little bit because they are, screwing us over again. They're trying to prevent this gamma infinity squeeze from happening. And you got to hedge your bets, in my opinion. This is what I would be doing. And that's what I did a little bit last time as well, is that when that kind of stuff happens, you got to understand that a lot of people are going to be selling and running for the hills because they're screwing us again. They're not going to make, 15,000 GameStop shares happen like the stock price. They're not going to make that 150,000. Like, if you can't buy the stock can't go to $150,000. Like, we literally need to be able to buy the stock. We literally need to be able to buy options. We need that kind of thing. And if they stop us from buying, we cannot get the stock that high. Yes, it does sound crazy that someone may be buying the stock tomorrow or the next day or next week at like $500 or $1,000. And it could be completely correct if the data in the charts and the AI computer in Wall Street Bets is correct. Buying GameStop at $1,000 per share is not a bad idea. Like, if you get that $130,000 share price and you bought the stock at $1,000, you made a killing. You're infinity rich, essentially. So that's why, even if you do want to hedge your bets, and I do recommend, this is me personally, this is what I do, is that I do take some money off of the table. I do sell a little bit here and there. I do hedge my position. And so I am going to hedge some of my position. I'm going to sell a little bit here and there. But I am going to keep a significant chunk of money into the stock, because all you need, even if you had 5 shares and they went to $10,000 at 5 shares, that's $50,000 that you made, for example. Just think about if you had 50 shares of that. That is $500,000 for 50 shares, guys. That's an insane amount of money, right? So you need a small amount. And then if you think about it, an option contract is equivalent to 100 shares. So just one option contract could be worth as much as like $1 million if the infinity squeeze does happen. So literally, if you have just one option contract, you could make yourself filthy freaking rich if this works out. And this works out, in my opinion, by people holding and diamond handing here, and also getting a catalyst, holding and buying more. Buying is very, very important. We need the upward pressure. And then we also need a catalyst. So if, Elon Musk is out there and wants to help us out, throw us a bone again, you would make a ton of multimillionaires, Elon, if you actually tweet out GameStocks again or something else GameStop related. Tweet out a video game or just a picture of the store, something like that. If Elon did something like that, the stock price would just skyrocket it. I don't think he's going to do anything because I guess he's under investigation by the SEC again for Tesla stock stuff shenanigans. But yeah, so any kind of thing like that. Mark Cuban might come out tomorrow and say something. Kevin O'Leary is on board. We have Conan O'Brien on board recently, and that was one of the original spikes for this stock yesterday or 2 days ago, the Conan O'Brien endorsement. So like, man, DFV, if DFV posts anything. So there's a lot of crazy catalysts that could happen. Ryan Cohen could tweet another ice cream cone, make everyone go to McDonald's and buy ice cream again, for example. There's just so many good things that could come out. And it only takes a small little spark to create this massive rocket ship up. Yes, the stock could go down. It probably will. So mathematically, I'm if I had to give a percentage here, I would say that probably 50% chance that the stock goes down to like $90 tomorrow. That's probably what I'm guessing. And then the other 50% chance that is that stock goes up, probably just a little bit, probably goes up to like 150, 200. That's probably my guesses. And there's probably we'd have to change that. 40% that the stock goes up to like 150, 200-ish range. And there's probably a 5% chance that the stock goes to like 300. And then there's probably like a 1% chance that the stock goes to, 1,000 tomorrow. Like, you look at it mathematically, I think there's a greater chance that the stock goes down. But mathematically, when you look at the amount of pain that you can get, the stock can only go down to $40. In my opinion, $40 is the absolute lowest that the stock could literally ever go to right now. Like, the support at $40 was unheard of. There is no way that this stock is going lower than $40. So many diamond hands happened at the $50 mark. There's no way we're going down there. We are now testing the support at the $100 range. If we hold the $100 range for the next couple of days and we don't see the squeeze yet, that means $100 is the new bottom price point. So, can we stay diamond handing at $100 for the next week? That is a very, very possible thing. But as of now, we don't have to worry about going to zero. The company's not going to zero. GameStop stock's not going to zero. The worst case scenario, it goes down to 40. Worst case scenario is that you lose $60. The best case scenario is that the stock goes up, we'll say 1,000 tomorrow. So your worst case scenario is you lose $60. Your best case scenario is that by tomorrow, you win $900. Of course, they're not equal. I think the chance to go down to $40 is probably a lot higher than the chances going up to 1,000 tomorrow. If I were to have out percentages again, it probably would be like a 10% chance that it goes to 40, and then like a 5%, 1% chance that it goes to 1,000 tomorrow. I think the squeeze is going to happen over days, over a period of time, but it very well could happen tomorrow. We could see this massive rocket spike tomorrow. I do believe that next week is a safer bet for the squeeze, though. So let me know in the comment section what you think. What are you guys doing? Are you diamond handing? How many shares do you have? How many option contracts do you have? Post them down below. Let your friends and family know about this and give them the reasons why you think GameStop is going to the moon. And the moon for you could be $1,000. It could be $500. It could be $10,000. And always don't let anyone ever tell you that you're wrong for selling your stock at $200 or $300 or $400. It is not wrong of you to sell your stock at whatever price makes you happy. Okay? So thanks for watching as always. Have a good night. And man, this was a very, very long video, but there was so much to talk about. So if you got this far, please hit that like button. Please subscribe to the channel. I will talk to you guys later. Thanks for watching.